Okay. This interview is for my summer history assignment. Today's date is August 20th, 2025. My name is Zach Lin.
Hi, my name is Wanda Su Zaxma.
Okay, let's get right into it. First question. Where were you when the event occurred?
I was living in San Francisco.
Next question. What were you doing during that time?
I was a housewife.
How did you find out about it?
I find out from the local news.
So, like, do you remember, do you remember, like, a specific news outlet?
Probably like Bay Area news and also saw in the CNN.
Next question. Did you feel any changes or repercussions to your daily life after the event?
Mm, no.
No. So you didn't feel like grocery prices increased, anything like that, gas increased?
No, I don't feel that big difference compared with now.
Okay. Next question. How did the event affect you at that time?
Not much at that time, but there are a lot of people had been struggling to make payment, as I know.
Do you remember why they were kind of like struggling?
I heard some people losing. They're supposed to have two income and they're losing one, or some people got cut hours. So maybe that's the reason they're being struggled financially.
So more like, would you say, blue collar job people
Yeah,
were
some
getting?
blue collar job people and also middle class. Some of them supposed to have a two job, and then some of the kids. So maybe that's why they come in the payment.
Okay. How has the event affected you since then?
How they
How has the event affected you since then?
that time I feel it's hard to get a good value of my home for the home equity line of credit.
So can you explain to me what is home equity line of credit?
The home equity line of credit, that's the home equity loan allows you to borrow the money against the equity you have to build in your home. And home equity is calculate as your home's current value minus whatever you own the mortgage. For example, my house, if I got it like the market value probably 10,000, my mortgage is 7,000, so I do have a room for 3,000, right? So the market value maybe that right now it's increased now another couple thousand. So technically I can borrow 5,000. So of course bank probably just allow me to borrow 3 or 4,000 to like home improvement. Yeah.
How did those around you react, like family and friends, to this event?
Um, the like the friends, some friends like losing their homes. Unfortunately, they can't make the payment, and some of family members they try to purchase the house. They have a hard time to get a loan proof. Or like they want to get some home equity line, they couldn't get it because the house value was dropped.
Okay. Did this event impact your faith in the United States as a financial institution? Because through my researching of this event, I kind of realized that I'd say the U.S. was kind of like, I guess, a house of cards, because because this kind of showed like how on the outside the U.S. kind of looks like really strong and sturdy, but in the inside there was kind of like loopholes that some people exploited, which led to like kind of like this downfall, this crisis.
No, I didn't lose my faith for the U.S. financial institute. I still believe they have a really strong, financial in U.S.
So you still think like it's still a powerhouse? like we kind of like the U.S. kind of like bounced back pretty quickly.
Oh yeah, I believe so because just couple bad people doing a bad thing, I believe they will come back.
Okay. Do you think the crisis could have been prevented? If so, how?
Definitely, I believe, if the brokers, those mortgage broker didn't apply the loan to given to the borrower with the bad credit histories, often adjustable interest rate. Instead, they could provide proper information about what the difference between the fixed rate and the variable rate when the homeowner go to them to finance or refinance.
Can you talk more about this variable mortgage rate?
That's the full term is called adjustable rate mortgage. It's the home loan where your interest rate can change, particularly through the loan life. For example, some is like adjust after 3 years later, 5 years later, 7 years, and how much it's be adjust. Your go some is go with the some the market index or other bank. They have their own rate sheet. So you have to talk to your the broker what kind of lender they have and make sure they understand what they're going to sign for.
So would you say like people with lower credit scores, because that's what they judge people on, right? Credit scores?
Some people made bad decision and unfortunately they didn't go well as they wish. But they do need to understand people have to be afforded, not just according just based on the credit report, right? So they have a bad credit, but they do pay down payment more, so they can be more value for the house when they default it. So the bank won't be struggle for those payment or get back to the reasonable property value. The lender don't lose the money. Of course, bad credit people need to make sure they are reliable to make each payment.
Yeah. Also, so another story is basically would you say like the homeowners that were getting these loans, if they were like what do you think would have happened if they were more knowledgeable? Do you think they still would have made these loans?
I think half of them probably rather to rent because maybe for 3 years, 5 years, the adjust rate they can afford it. Maybe just pay $1,000 for mortgage, and after 3 years or 5 years, it jump to like 3 times, 3,000, 5,000, and then they have to think about one of them they couldn't, maintain their job, or they don't have enough savings. Right, they put all their savings to purchase the house. It was a down pay, so there will be the risk. So I believe that be like get more stable on the mortgage if those people have more knowledge what they sign up or get into it. So there will be less crazy things happen.
So what you're basically saying is, if they were more knowledgeable, maybe it wouldn't have been such a big crisis, because people with people without the ability to like pay these loans in a way, they wouldn't be as like how would I say this, like be more, it wouldn't be as willing to do out these loans as they were in this crisis during that time.
Yeah, I believe that if those people be knowledgeable, they won't get, to borrow those loans. And then some aggressive, as I know, the whole thing also not just bad credit people, also some lender they are really aggressive, and they put out really good, like a marketing sign to tell people they can own the home as American dreams, right? So people, put all their whatever they have a saving and purchase the house, and unfortunately they can't maintain that payment and lose everything. So those lender have to also be, responsible for that because they've been too, aggressive and didn't explain enough to, homeowners. So whoever the loan they borrow, and then bring the whole global situation to this crisis.
Last question. What do I need to know that I haven't asked you yet?
Even though I feel like this crisis appear to only affect the people with mortgage, small business owner also suffer into the loan run due to the bank, and bank become like stricter about who they could lend to, because it's all impact. It's you want to lend money, you can make sure you got your interest back and also your principal back. So unfortunately, that will be not easy for everybody to borrow the money now.
Okay. Thank you for this interview, I guess.
Okay, thank you.